All right, folks, welcome to the video. Anthony Special here with Hawkeye Traders. Hope everyone's having a wonderful day. Looking forward to sharing this strategy with you. I want to talk about topping patterns, bottoming patterns, potential reversals, and how you can employ volume as your trigger to enter a lower risk setup. So what we're looking at here is the US dollar index futures. Okay, so this is the US dollar. You can see we've created a bit of a topping pattern here as we've pushed into these highs with relatively notable buying volume. We've been unsuccessful in pushing any higher. So, you know, when I start to see that, I just want to mark my chart up and go, you know what? This area has become meaningful to me, right? I need to keep an eye on this area, right? I see I banged against it a few times. Seem to be unsuccessful in getting above that area. Now, whenever I identify what could become a potential high or could become a potential low, I always look for, well, where is the nearest support, okay? Because that becomes very meaningful to me. Where's the nearest support? And if I had to pick that line right here, it would probably look something like this. All right, so this was previously resistance. We broke above it, fell a little short of it, came back, retested it on this interior low. All right, and this is the low in between all the touches here inside this area that we would consider supply. Now, for those of you who are familiar with trading tops and bottoms, it's very common that what we would call either a neckline, right, or a support line be broken and then retested, okay? And the way that we would look to try to take advantage of a setup like this is let the top form out, okay? Let the break occur. Let's see that there's an increased presence of sellers, and then look for the pullback back above that level. That's going to give you the lowest risk setup in trying to capture what could be a very substantial move to the downside. Okay, so where I'm looking, just so you can see, I plot an arrow there so it's very obvious. I'm looking very specifically at this candle. Notice we pull back on neutral volume and then the sellers step back in above this support line. So to me, it's very important that we can identify a spot above that support line as a potential area to enter the market short, because it simply minimizes our risk, right? I mean, that's what we are as traders. We are risk managers. We have to minimize our risk, right? So if I got short here, right, I'm risking a very small amount. Whether I just try to cap that top or not, you know, I'm risking a fairly small amount in comparison to now I'm looking to press through the most recent lows here, you know, which is going to take us in a direction somewhere down into this area, right? So in this instance, it was like a very small percentage, right? And we got a 5% move. So, right, risking about 1.35% versus a 5% move. Right? And how do we know that there's going to be a 5% move? Well, we don't know with certainty, but we can certainly look back and say, where did price push to most recently, right? Where's that more recent low, and can we trade back towards it? And listen, you're going to want to look for a wide bar, right? Notice that this wide bar here, the low of this wide bar caught price action on the way down. Okay, that's why wide bars are so important. Right, where did we pull back to? Oh, we pulled back to the wide bar. Okay, so whenever I see a wide bar on my chart, whether I'm trading intraday or swing trading, you can bet that I'm marking it off. Why? Because when price comes back in to a wide bar, you know I'm going to be wanting to take some profit. So again, I do this. I shot this video very specifically, kind of covering topping patterns. This can be inverse to bottoming patterns. But the reality is, when you believe the market is being absorbed or has an inability to continue higher, right, you can always wait for the break, right? You want the break to be favoring volume, so the sellers aggressively broke. Let the buyers pull back in, right? Because there's always going to be stop orders resting here. So So when those orders get filled, there's going to be natural pushback. And then look for new presence of sellers and then take your low risk setup. Again, this was like less than 1.4% and we pushed into over a 5% move. That's very substantial, okay? So that's a great probability. So next time you're looking at either a topping pattern or a bottoming pattern, whether it be intraday or swing trading, give it time to develop, okay? Monitor the price action, monitor the volume, monitor who's in control on the initial break, right? Do we have sellers? Yes, we do. And then wait for the pullback. Wait for new selling to come in on a correction, and then look to take the move down or inversely up if you're doing this on a bottoming pattern. So I want to share, kind of this insight to you of how I read price action, but also how you can, with that reading of price action, employ that volume on top of it and then say, all right, I have a full understanding here. If I believe that a top is completely formed, if I believe the sellers are now in control, I want to get short as high as possible to give me the greatest probability of collecting the most return on my position. So there's your impulse, there's a break of support, there's your correction, your new presence of sellers, impulse, correction, impulse, consolidation, impulse right into this prior wide bar on the way up. All right? Hope you guys learned something from this video. If I can help you in any way, of course, our information is down below. Feel free to reach out to us. But more importantly, I encourage you to click the link to watch the training webinar so that you can consume more content related to volume and price action. Because the reality is, guys, without an understanding of that and really dialing that into your approach of the market, and again, it doesn't matter if you're day trading, swing trading, position trading, if you're trading stocks, futures, forex, cryptocurrencies, none of that matters. Okay? The principles apply regardless. So we want to make sure that you have them down pat. All right? Having these indicators, letting them populate on your screen, giving you the visual, then having the knowledge that we offer you to put that puzzle piece together genuinely allows you to build a thesis around what's transpiring and, more importantly, what may transpire next. I'll see you in the next video. God bless and have a wonderful day.